Hey guys, Eric here, Mr. Fired Up Wealth. Today I'm going to bring you one of my top mid-cap growth stocks. Now this is going to be a new video series. It's going to be a playlist on the channel, so definitely subscribe. You're going to want to see the rest of the videos as well. Today we're focused on just one stock. I'm going to make these videos a little bit shorter and I'm going to test it out. If they get view time, if you watch the entire video from start to finish and I have good stats, I'll start doing more of these shorter videos. So please definitely watch the entire video, hit the like button, subscribe, drop me a comment. So we're going to talk today about the Amazon of housing. You probably already know what that is, but it's Zillow Group. Now they're an early leader in this space. They're a disruptive technology company. I've talked about it on the channel several times. I did a video back in 2019. It was called the top 5 under the radar AI, artificial intelligence stocks. And Zillow Group made that because of their really strong algorithms in order to help buyers find homes and to do things like Zestimates. So Zillow Group really is the best of breed, in my opinion, when you think of the housing apps. You've also got Redfin, you've got Opendoor. Those are good companies. I think all three of these companies can do well because the total addressable market is massive. But here's the deal with Zillow Group. Now it's made a nice pullback. We'll talk more about the price later, but it's sitting at around a $26 billion market cap. You have to ask yourself, is this company going to be worth a lot more than $26 billion over the next 5 and 10 years? I think the answer is probably yes, and I'm going to show you on this video why I think that. But without question, guys, the current real estate environment is being disrupted, and that disruption will continue for several years. You're going to want to see this video, find out more information about Zillow Group. Stay tuned. All right, guys, so when you think of Zillow Group, you think of today's user experience. Everybody wants things at their fingertips. They want it quickly. They want it digital. You think of Netflix, Uber, Lyft, Grubhub, Amazon, Airbnb, Expedia, Carvana. All these are apps that make our lives simpler, and Zillow Group fills that bill when it comes to housing. This slide here shows you just how complex the real estate environment currently is. When you think of all the things that have to happen from the move, the close, before that you've got the research, selecting, shopping, inspecting. Now in today's market, people are just buying without even doing inspections or even looking at the house. But typically there's appraisals, there's all of this that goes into it. And Zillow Group is trying to do what they call real estate 2.0. They really just want to be that one-stop shop that allows you to do all of these things in one application. And here it is, our solution, Zillow 2.0, create a radically simpler real estate transaction through technology, service, and integration. They are the leader in online real estate today. That's why I call them the best of breed. They've got a substantial, I think, algorithm and data advantage, large audience and engagement. They got 15 years of experience in the industry, lots of great partnership. They're best in class when it comes to technology. Now this slide is a little bit old. It says 197 million monthly unique users. That number is actually 221 million monthly active users as of Q1 2021. The visits are up too. You can see 8 billion visits in 2019. The thing that I really want to draw attention to here, and I've said this before on the channel, they have 50% greater unaided brand awareness in the United States. So if you look at the bottom right, guys, the word Zillow is actually searched on Google more than the term real estate. That's pretty powerful right there. And you think of people say, I need a Kleenex, but it could be a generic tissue. You think of a Zestimate or I'm gonna go Zillow a house. It's become a verb. Just like Zoom video, it's become a verb and it's now part of our society, part of our culture. Now here's another slide you can read while I talk about some other stats separate from the slide. So it's estimated that every year, $1.9 trillion of real estate transactions are taking place just in the United States alone. This promises a massive, very huge total addressable market for Zillow Group. Another interesting stat here, guys, more than 97% of users entered the website from the United States, and they spent about 6 minutes on the platform, which is actually pretty good. About 56% of users entered Zillow.com directly. 40% use search engines. Take this next slide with a grain of salt, but you can see here, they think that the home transaction market opportunity is $1.9 trillion, not including renovation, mortgage insurance, mortgage, title escrow, moving and appraisal. And they're trying to get involved with all this. So in theory, it would actually be even larger than $1.9 trillion. This is one of the biggest total addressable markets when you think of growth stocks and you're looking at them. I mean, that's why I think Opendoor, Redfin, and Zillow Group can all do well. There's just so much total addressable market. And in my opinion, there's no question that they're going to continue to disrupt the real estate industry. All right, guys. So you can see Zillow Group. This is on Fidelity here. Mid cap, it's at $26.54 billion right now. You can see it is expensive. Okay. It's 662 PE ratio. The PEG ratio, 5 years, 11.52. So this is a high risk kind of growth stock. You could probably call it a spec depending on how much you really like this space. I think that this has a lot of total addressable market. I think they're going through kind of an exploratory or I guess you could call it an experimental phase, and there are risks to that. So I'm going to go through some notes here and explain what I'm talking about. Okay, so in this last quarter, in Q1 2021, the company recorded $1.2 billion in revenue and was able to beat initial guidance in every segment, okay? So their IMT segment recorded 35% year-over-year growth, which is a very profitable business, as adjusted EBITDA margin is actually 46.7%. Some people might be surprised by that. Now, the home segment is gradually accelerating, as in Q1 of 2021, they bought 1,856 homes and they sold 1,965 homes. At the same time, their mortgage segment was really skyrocketing higher. The company recorded 169% revenue year-over-year growth in that segment. Now, if you think of Rocket, right? You think of Rocket Mortgage, you're seeing threats, you're seeing competition and disruption in these big banks, and even Rocket Mortgage, which could be considered kind of a bank disruptor. You're seeing disruption even with Rocket Mortgage, which is part of the reason why the stock is down, because of companies like Zillow Group coming in and having 169% segment year-over-year growth on their mortgage business. All right, guys, so Zillow Group, the Amazon of housing. I'm going to go into what I think about the stock price and some threats here. So obviously, I've got a bullish thesis. What's the bear case on this? I'm going to go through that here in a second. Before I do that, if you like the video, please drop me a like, drop me a comment. Both those things help the algorithm. You can also share with friends. That helps. If you haven't subscribed to the channel, please do. This is going to be part of a series. I'm going to start a playlist on Fired Up Wealth, and you can go and look at all the top mid-cap growth companies. And there's some exciting ones on that list. You're going to want to see it. So let's get into it. So we talked about the bullish case. You know, they're the Amazon of housing. They're early adopter. They've got the best algorithms in AI, you know, best of breed, in my opinion. $26 billion market cap. Gets a price here in a second. iBuying. So iBuying probably is a threat. And this has been talked about. A lot of people don't like the iBuying with any of these companies. When you think of, you know, Open Doors doing more of this as well, and it's really a trend in the industry. I think longer term, there's a lot of opportunity with the iBuying, but they have to scale that and figure out how to do it profitably. Right now, every time they buy and sell a house, they're losing money. You look at like the Q1 performance and everything is, well, we beat in every segment and we're doing great, et cetera. But the iBuying, they're actually losing money. So don't be fooled on that. They're losing money. So traditional real estate will be disrupted over the next 2 decades, next 5, 10 years, and so on. Long term, this is going to be a disruption. It's going to take time though, and it's going to take a lot of work. So there are some risks. You need to hear that. There's some risks because they need to figure out how to make this iBuying profitable. So at the end of the day, I mean, they're really in this experimental phase. They're trying to figure that out. I have confidence in the management team. I have confidence in the platform. If one company in this space, when you think of applications, you think of, the e-housing space and iBuying space. There's one company that I think will be successful, that's poised for success. It's Zillow Group. In terms of price of the stock, guys, I would prefer to get it under $100, but it's been very tough to get that. It bounced off of $105 earlier in the year, and I think $108, and it's sitting right now kind of in that $108 range. In fact, it was closer to 105, 106 yesterday, which is why I wanted to make this video. I thought it was an opportunity. It has bounced up a little bit. With everything, I would dollar cost average. I honestly think, in my opinion, that this range long term is not a bad opportunity. It's come back quite a bit. And that's kind of why I targeted it for the video, because in my opinion, it's an area where you could buy. It could always go lower. But it seems like there's been support at that 105, 108 range a couple different times. There's buyers at that level. So the chances of it, it's all a game of odds and stats. The chances of it breaking $100, probably pretty low, but not impossible. That's why I would dollar cost average. But I actually think in this $110 and less range, it's attractive long term. All right, guys, in closing, so the high on this, the 52-week high on Zillow Group, and I prefer to trade the ticker ZG. Now, that's just A shares. You can also buy the ticker Z, which is C shares. It doesn't really matter much. It's voting rights. You can research that and figure out what's best for you. I own ZG, and ZG A shares are trading right now as I speak at $106.32. So as I've been recording the video, it went from red to green to red. The 52-week high was $212.40 in the beginning of 2021. So this literally has cut itself in half. I think it's an opportunity at this level. If this video was helpful, please hit the like button, drop a comment. But as a reminder, definitely subscribe because this series is going to be very good. There's a lot of great stocks on here and you're going to want to see those. I appreciate your time and attention. Hope you have a great rest of your day. Take care.